for some crude reality. Oil prices have been on the rise, up over 9% from a week ago. Check out gasoline futures. They're up over 11%. We're going to talk about this latest tax on the consumer. But first up, CNBC's very own Sharon Epperson with more on these energy prices. Sharon, what is going on?
Well, you know, Larry, the drumbeat for higher oil prices, it's getting louder every day. Over $83 a barrel right now. Oil prices are at the highest level that they've been since May. Now, when you look at the sharp increase that we've seen in crude oil supplies and the decline that we saw in distillate inventories and gasoline inventories, you think this would stop the momentum trade? Well, it's certainly not at all. Oil prices are up about $8 in a week, as you mentioned. The weaker dollar has caused traders to pour money into oil and other commodities.
I want to make sure you quote that. She said that a weaker dollar caused traders to invest money into oil and other commodities, which of course is a problem because that is diverting money from investing into corporations, and of course corporations hire people, so that affects employment. But the crux of the story is about the increase in oil prices. So let's see how these increasing oil prices will affect our overall economy and us specifically. Let's continue watching.
And why is this happening? Well, the bull's case, of course, oil prices are surging for the same reasons that other commodities are rallying. Expectations of more quantitative easing, decline in the dollar and other currencies. But then add to that the de facto drilling moratorium that's likely to continue in the Gulf of Mexico into next year, and a major strike in France that could impact refineries there. That's also pushing up oil prices. So, Larry, when you look at all this, $90 oil, $100 oil, it would be devastating to the millions of Americans, of course, who are out of work. They've already seen their gas prices at the pump rise 12% in the past year, and now heating oil prices are expected to be the second highest on record this winter.
Okay, here's the bottom line. Oil prices are expected to go higher, not because there's a shortage in oil, but because investors are investing in commodities like oil because they have a higher level comfort zone, so to speak, in these types of investment because they're less attached or not attached to the dollar, which is weakening. Okay, so get prepared to pay higher oil prices and potentially higher gasoline prices at the pump this winter because of essentially speculative buying and investing in the stock market, because investors are moving their money to commodities like gold, silver, and oil. Thanks for watching. Please comment.